Hi everyone, just thought I'd make a quick video on the FOMC, and this is the Fed Watch tool. And in a nutshell, the Federal Reserve are expected really to hold rates. I know there's been a lot of talk about the potential cut and the ease, and it's gone up slightly, but the probability is still in the no change, higher probability range. So the Federal Reserve are the ones that will control monetary policy, and they said that they are data dependent. So data dependency is obviously, looking at the GDP, inflation figures, etc. Now, I don't think there's any reason for them to want to cut straight away, right? So they're in a great position. The U.S. economy is in a say great, but they're in a good position regarding their economic and monetary policy standing compared to everyone else. Number one on the fundamental analysis spreadsheet. So I don't think that they will cut. And again, probability 74% obviously say that they're not going to cut. As much as Donald Trump does want them to potentially cut rates because he wants a more competitive advantage against the Chinese yuan and the euro as well. Now that the euro, Mario Draghi came out the other day saying that he's open to more stimulus. So he's been moaning a little bit. Donald Trump slammed Mario Draghi's rate cut plans, so that's the reason why. He doesn't want an expensive dollar because he basically loses leverage on his with the trade war, right, that he's trying to negotiate with China and really the rest of the world. So what to expect for today? If they cut rates, then the dollar is going to be a short-term sell. So euro dollar is going to be the one to buy. If they do come out. If they don't cut today and prices go higher, right? It goes to the upside. I wouldn't necessarily buy the euro against the US dollar. I would just be looking for prices to come to a level where I want to be some sort of buyer, and probably around there I want to see some sort of manipulation, as we've touched this level once, twice, 3 times. So maybe the higher into this level, so you can kind of get rid of this for now and put this on here. 1 second. Where are we? Why have I forgotten where my Fibonacci tool is? Here we go. Right there. So that's where probably the new supply zone would be. So you'd probably want to see price come up into this area or up into this higher area before looking at shorting, because we know that Mario Draghi wants a cheaper euro, and so if price starts to actually come up, it's more problematic for the euro, isn't it? They want an expensive exchange rate. That's good for the dollar, but it's not good for the euro. So this is where you want to start to look for shorts, because it puts pressure on Mario Draghi to potentially start to increase stimulus, etc. The longer, the higher this goes, and the longer this stays up here. So if it doesn't, if they hold rates, they don't cut rates, then and price up to move up, then it just puts it in puts price in a position in the exchange rate where we want to be, sellers and buyers of the dollar up here. Right, it's more advantageous for us. So don't chase price, we chase value. We look for value, guys, and lady Marita. Yes, this is what we're looking for. This is the plan, and yeah. So that's about it. If you do have any questions, I'll be in and out, the room. I've got some things I've got to kind of do this evening, but I'll try and get back to everyone as soon as possible. Again, if they cut rates, you probably want to short the dollar on some short-term sentiment. I don't know whether you want to hold, that trade for any length of time, like into like weeks or something like that, maybe a day or two, as the sentiment probably will drive the dollar weaker, right, because it has wrong-footed the market. But other than any kind of hold, I guess or if they do hold, then just observe price, see what it does, and then wait for prices to really kind of come back if they do to any kind of supply zones before looking to get short. All right, guys, take care and speak to you soon.